Welcome to my daily review. Today is Wednesday, April 9th. Not much going on in the market today, was there? Oh, wait a minute. The Nasdaq was up 12%. 1,857 points, closed at 17,124. You can see the volume was 70% above the average 50-day volume, so high volume move higher. Today was day three of an attempted rally. We like to wait to day four, just to get this type of stuff out of the way, the short covering. And if we're really going to have a sustained rally, we want the institutions supporting the market. And this is just obviously short covering after, the president tweeted about tariffs today. So, there were too many people on the short side of the boat, and they had to get off. So that's the problem with shorting. It's really hard to make money shorting because you run into days like this. So a lot of folks were short, a lot of negative sentiment. The VIX was super high. A lot of things, indicators saying that, this thing's oversold. It needs to go the other way. And then one tweet, and we're up 12% on the Nasdaq. I just want to say that, don't go crazy here just because, it's up in one day. You didn't miss a thing. I just want to go back to last week, which was the second, and the Nasdaq's down nearly 3% still in a week. That's a lot to be down in a week, 2.7%. So yeah, you haven't missed anything. It's just trying to get back. There's a SPY down 2.8%, just trying to get back what it lost when, the day of the Liberation Day when the tariffs were going to be put on, and it was really draconian policy. Now, he's tweeted that he's, laxing the policy, so the market goes up. But we're just interested in making money in the market. We need a sustained rally, and I keep going back to 2019 because, and I'm going to go back to the Nasdaq. Don't worry, the daily chart, but I just want to point out this because I think this is the most relevant. If you're going to do precedent analysis, this is the most relevant where we had this. This is 2018, the fall of 2018, where China and US were in a trade war. Does that sound familiar? And then Powell was raising rates. Does that sound familiar? We want lower rates. Everybody wants lower rates. And Powell was raising rates, and Trump was having a cow. And finally, Powell acquiesced. And this is what we had. We had a V-shaped, rally after the three waves down. We had a V-shaped rally, and I think this is what we're in for now because not really much has changed, right? It's just a bunch of talk, and we have tariffs. A tariff, really a trade war going on with one country, China. And this could go on forever. It could end tomorrow. Who knows? But this is what I believe is the most likely scenario that we're going to see. I'm not making predictions. I'm just saying I think this is our most likely scenario. Right here we have this, to me, this is like our third wave down. There's one, there's two, we had your, bear wedge, and then three. Now on Monday, I talked about that low is a low. It might not be the low, but is a low. And it certainly is, a low so far. The low was 14,784. It's a 27% correction from the December 16th high of 20,204. So that's a very significant bear market. It would not surprise me to see this thing rally back up. It's got to go through 18, 18 up to 81. We need to see a follow-through day. That is a move of 1% or higher with above, the prior day's volume. So I'm not looking for it tomorrow, but maybe Friday or next week. We need to see a subsequent, not a 12% move, just 1% higher. If it just goes sideways the next couple of days, that'd be great. But so far, what we have now is a lower low. We had this low here, and it is a low. I don't know if it's the low, but it's a low. Then you had a higher low and a higher high on Tuesday, and today a higher high and a higher low on Wednesday. So this looks to be the start. Maybe the dark times are over, the worst times are over. I just had 5 stocks on my ready list this week to buy. In the case of a follow-through day, which we had to wait till Thursday, day four, because we want to buy when the institutions are buying and not just when the shorts are covering. They're like, oops, we're on the wrong side of the trade. We better cover our shorts before we lose our shorts, right? So that's just what happened today. That's all. Big move, and this is what happens, with short covering. You get this big, wild moves. To me, it's not healthy, this type of, wide and loose type of action. But it did cover, some of these gaps that we saw on the way down from the second there. The gap was 17,181. Definitely took that out today with the close at 17,124, and the high was 17,202. So we closed that Liberation Day gap, from last Wednesday when he made that announcement. Anyway, and there's a lot going on. I just wanted to point that out and just point out that we're still, 3% lower from the day when that was announced. So I would expect us to get that all back. Although, we have earnings season coming up, and we got earnings today. I'm going to get there in a minute, but I have to go through some of the Magnificent Seven names because obviously Apple. This is what drives the market, right? the these stocks, and the index is up, the Magnificent Seven's up higher. Apple obviously has some vulnerability with China. It was up 15% today. Definitely some short covering there. And you can see the big volume bar. Still, well below its 213%. I forgot to point that out on the Nasdaq here. The Nasdaq is still 7% below its 200. You can see the 50 finally has crossed below. There it is at 393 and 814. So the 50 is below the 200. So that's your old death cross there. But those are like secondary or third or fourth type of indicators. I should go to the SPY and the RSP. SPY up 10% today. Still, closed, with that hammer candle. 100% of the daily range as the short scramble to cover. And it's still 4.4% below the 200. And then the RSP was up 8%, so not quite as much. So that tells you that those 493 other stocks didn't do as well as the Mag 7. I showed you Apple, there's Microsoft. Yeah, nice. Microsoft has been down so long that it looks like up, it's any type of move higher. But yeah, definitely in a stage 4 decline, up 8% today, and it was probably the laggard of these stocks. Meta Platforms was up 14%. This one closed above the 200. And I'm looking for stocks, like if I'm looking to buy stocks, I want these stocks that are above their 50 here. Above the 200 is nice, but come on, this is still, very dangerous. We're seeing a lot of patterns like this, though. Double bottom bases. I pointed that out yesterday, and I think that will be. I shouldn't predict. Okay, there's Google here. A lot of nothing good happens below the 200, folks, and these things are way below the 200 still. Yeah, 8.8% below Amazon. So Meta is your best looking one in the Mag 7. NVDA, yeah. Got a little 18, 19% move today, so don't tell me that people won't short NVIDIA. It's still 9.7% below the 200, still has that death cross, but nice short covering. Tesla had a nice move today, up what, 22%, $50 move. Yeah, still below the 6% below the 200, and that 50 is really diving. So, yeah, we still have work to do. I mean, if we're going to have a sustained rally that you could participate in, just wait for the follow through day. You don't have to jump at the shiny object the first thing. If you bought something today, fine. Just monitor it. Use your 5% stop loss in case we get more selling. But you probably got a good price if you bought in today, and maybe that will hold for you. But that's fine either way. Just play by the rules, man. I'm trying to play by the rules here. Those are your Mag 7. I showed you the Nasdaq and the SPY. Still 3% below just a week ago. So they're still down 3% from a week ago. I expect that. I expect we're going to have a follow through day and it's going to make up that ground, but probably not, tomorrow or this week. We'll probably have to be patient and wait till next week. All right. I mentioned earnings. Earnings season started. We're going to hear from the banks later on this week. Delta Airlines reported. The report was not good. And the CEO mentioned that he said that the US, domestic demand was okay, but international was about 80% of normal. which is another way of saying, we're going to cut 20% guidance on international flights. But he didn't say that. He just, there's no guidance. And you're going to hear that a lot from companies, even with the 90-day delay or a pause on the tariffs. You're going to get a lot of companies just saying, we don't have enough clarity to provide guidance for you. Because if they put the tariffs on in 90 days, then they're sunk with their predictions or their forecasts or of giving guidance. So you're going to see a lot of companies just not giving guidance this quarter. And I think companies would love to not give guidance ever, but the Wall Street kind of demands it. So anyway, a nice earnings move for Delta Airlines on volume, up 23%. That is a nice move for that company. I always look for, other companies, within the same space that are going to, benefit, and here's United Airlines. This is what I call pen action, even though they're not reporting till next week. Got some pen action from the Delta report, and then of course Southwest Airlines. That was only up 15%, so kind of a laggard, and then American Airlines up 22%, and Alaska Airlines. So the airlines, did pretty well. Speaking of beaten down stocks, you can see these are really beaten down. This is Alaska, still below its 200, even though it's up 23% move, and you're still below the 200. That's how beaten down these stocks are. So I've got to go to the retail names because retail obviously has, tariff issues with, the retail. A lot of the stuff that we have made, our apparel and our shoes are made in Vietnam and China. So these stocks got a little reprieve today. And I got to say, I'm not a big fan of Nike, but this looks like a bottom to me, where it trades at a low here on this day of, what day is this? Get the right day, Marty. You zoomed in too much. This is April 4, which is what? Friday? Okay, it made that low of 52.50, and then it made a higher low on Monday, but Tuesday revisited that. 52.37 today, 52.50 looks to be the low, and then rallied off of that low of 59.32. Let's take a look at like a 10-minute chart and see how it just keeps coming back to that spot there. So that might be your low in Nike. I'm not going to buy Nike. I'm not a fan of Nike, but I'm just saying that to me looks to me like a bottom. But that's not my strength. I buy strength. I buy stocks showing relative strength above their moving averages. I don't like fooling around with this because I like to buy what the institutions are buying. This is Deckers up 14% today. To me, this thing looks like it made a bottom as well there. The low of 93.72 on last Friday. And now, like I said, higher high, higher low. And today made a 116. Yeah, closed at 116 with that. Looks like 85% of the daily range. So maybe the worst is over for Deckers as well. Crocs, they make their shoes in Vietnam. Something about Crocs I was going to say, like on a tariff, if you have, let's just say, I don't know, a 10% tariff, or let's call it a 20% tariff on a shoe, these guys are making a $30 shoe. It's a $6 difference, right? But if you're buying a Nike or a Deckers and they're $200, you have 20%, that's a $40 difference. So, obviously there are different types of shoes. One's a casual wear, one's athletic. But $40 is a lot different than six. And that's why I thought Crocs was in better shape if the tariffs were going to hold. But now we have a pause. So Crocs is right there at $100. Once again, up 11% today. Skechers, they're all up like 11% today. On Holdings, up 15%. So this is one of the stronger ones. And yeah, maybe the bottom's in for these retail names. All right, I'm going to move on. I got to switch around. I'm going to go back to some food stocks. Cal Maine reported last night, traded down to its 200, pulled back to that level again, then bounced 2.5% today, not bad. And then SMPL, they reported this morning, another food stock, maybe the bottom's in here. So, if you see a lot of stocks making a bottom and showing, double bottom bases, which I'm going to get to in a minute, maybe that says something in regards to, the bottom is in, because, leading stocks are going to tell you where the market's going to go. There it is, 130, your double bottom base, building the right side of this base. This looks pretty good for a move higher here. This is a Sprouts Farmers Market. So the food stock's looking okay. I've got to get to software because obviously if the tariff talk. I mentioned double bottom bases, and here we go. Seeing a lot of them in software names. Came down, made a low, rallied back up, then made another low after the Liberation Day last Wednesday. And since it made that bottom there, what was it, Monday, when I said, that's not the low, it's a low. It very well could be the low. But there, Palantir, this is one that I like right there, 98.17. Like to see it get back above 100, but to me, this one could be on our ready list pretty soon. That looks pretty good. The low is 66 on Monday. 2 days later, 93. So you can see the volatility in this market. Yeah, yeah. People getting caught short, man. Okay, CrowdStrike is another leading stock in this cybersecurity space. Made a low on Monday, I believe. Yeah, 298. So another one of these double bottom base patterns. So if yeah, this is why, this gives me more confidence, or it's being more convincing myself that we're having the lows are in, and these leading stocks are making these double bottom bases. So just confirmation when you look around here. This is rubric. This is one that I think, I'm looking for stocks that I think could be, two baggers, three baggers, five baggers, or 10 baggers, like we saw with MicroStrategy and App 11 last year. And I think this is one of them, because it's got a 12 billion market cap. Could it go to 120 billion? Why not? Why not? Yeah, it made this double bottom, went from 80 to 51 up to 76 and rallied down to like 40, what was it, 47 on Monday? Well, I went through this yesterday and I keep doing it. So I'm kind of locked on the same stocks. But anyway, yeah, okay, 47. I'll know these by heart pretty soon, especially if this thing keeps rallying up back through 76. So yeah, that would be an area of interest. Anyway, there's just a lot of them. Zscaler, another one. Oh God, that looks like a mess. All right, sorry about that. That hurts my eyes. Wow. Um, Spotify, another one that I like a lot. Is this going to be one of those stocks that, it's already 115 billion market cap, so probably not going to be a 10 bagger, but certainly could be a leader. I like this one, and Netflix definitely got that same type of pattern though. Since I mentioned Netflix, yeah, very pronounced here. Seeing the same type of patterns here, folks. So Monday, it might not be the low, but is a low. I'm going to say just between you and me, I think it's the low, and we're going to rally here, but I'm not predicting anything. It sure looks like it though. What you look for, and what I'm going to do tonight is just scan for stocks above their moving averages, because I want stocks that are showing strength. Netflix here, traded down to its 200. Now it's rallied back through its 50. Let's see exactly where this thing is here. No, it's below its 50, but it rallied back through the 10 and the 21. So another 2%, it'll be back through the 50. So Netflix looks really good to me. Anyway, what about, let's go to one more. Shopify. Not as enamored with this stock chart pattern, but it did recover from the Liberation Day low of 94.65. And no, it did not fill that gap there. And so it still has work to do for Shopify. Anyway, I'm going to get out of this group and go to another group that I like a lot. The drug stocks were showing real promise. This is a Corcept had news, and it just pulled back to that old buy point, and it bounced off its 50 today. So the first trip to the 50 since that breakout, and it was up 3.5% today. Not too bad. And then SLNO Therapeutics gapped up on an approval, traded back down to its not moving average. It traded down to its buy point. Yeah, it was its moving average at 21 there, and then rallied off that 21. The low today was 57. The 21 today was 60, so it closed $3 above there. So not bad for that stock as well. A couple of other names that I like in the group. Halo. Yeah, I got to go to a bigger, longer period. This one's still consolidating within a base. Had two nice weeks of shakeouts, then really shook some folks out today, or this week, I should say, down to the 200. So that to me is probably a bottom here, whatever low that thing made today. 55.71. Yeah, closed at 60. So yeah, I'm kind of liking this one a lot. right there. I would have a early entry here. Maybe if it gets above that 61 level, 60, 67 is definitely an area of interest. All right. Any other ones? Oh, yeah, the TGTX. I got to mention this one because this is one that TGTX had people were worried about their manufacturing plant. They have a Korean manufacturer. They're coming on board in the United States. So it's a North Carolina company. So their manufacturing is coming into the United States. What else did I want to say? Oh, Sanofi Aventis had a trial for a different type of MS drug. It's like a later stage where people are really sick, towards the end type of MS drug. Nothing like the RMS that TG has. So it's sold off today. I think people get confused sometimes. They just say, oh, a trial. We're just going to sell this dog, right? And so it pulled down to what, 3170, I think today was the low, 3184. I was out golfing. I just say, wow, what the hell is going on with this thing? So that was the low. And then, when I saw it down that low, I said, Jesus, I'm gonna have to buy some of this because it's been a long time since it's been that low. I mean, we had it here at the 27, and then retested that low at 28, and today hit 31. I don't think you're going to get that price for a while. Closed above the 50, which I like, but the 10 and the 21 are curling lower, which I don't like. While the low today was 31.01. How about that? So if you got it there at 31, congrats. Volume today was 139% of the average because I think what happened is people sold on that Sanofi trial. They didn't know what the hell they were doing or what they were reading, what they're looking at. They just sell. And then because everybody else is selling. And then the shorts got wind of the Trump news about the tariffs, which really doesn't have an impact on TG. But the shorts covered anyway. And so you could see on the 5-minute chart here, that's what short covering looks like. It's like, yeah, I got to get out of here. And there's a lot of shorts in this stock. So 31 to 36, let's call it. Yeah, pretty nice move for TG today. Anyway, I'm a longer term guy in this one. I think, longer term, 10 billion market cap is going to be pretty much a slam dunk for these guys. Right now it's what is it? 5.6, and it's down quite a bit, in the last, it was 43. Yeah, 17% off its high still. So it's got some work to do, but they're going to report on what, May 6th. So they're going to crush it. And I think it's going to respond. So anyway, that's enough of the drugs, except for I lie. CVS. One that I like, I had this on the ready list a couple weeks ago. I like it was trading tight, tight, and then it stopped trading tight. It got really wild here, man. CVS never trades like this. So it pulls back near its 200, then rallies higher. That's a crazy move. How much is it up on the week for a company like this up 10%? That's a hell of a move, man. Hell of a move. CVS. And then United Healthcare. This one's up 10% this week as well. And you can see on the weekly how it's forming this base here. Um, you know, um, it's got this downtrend line traded above there and then went flat, pulled back, obviously with the tariff news, and then has been rallying ever since. So that to me is a rally through the 200 is a buy point there, 553. And now it's at 578. I didn't have this on the ready list, but this one looks good. This is part of the Dow Jones Industrial Average. This one looks pretty good to me. All right. All right. That's why I showed it. All right. I'm going to move on for the drug stocks. And I'm going to get to just some stocks that I've been talking about a lot lately that I like, that I think have the potential to be, those two baggers and five baggers. And I've had this one on my ready list this week. And, there's a couple ways you can look at this is Dutch Bros. Made this high of 86.88 following earnings. Now it's got this downtrend line here that it needs to trade above, but it also has this double bottom base pattern. Monday, quite possibly the low. It's making higher highs now. And, obviously today was a higher low. The low on Monday was 47. So if you got it at 47, congrats. Yesterday the low was 51.62. Today it undercut that low, but look at that high, 62, right? So the high, the last four sessions, 54, 56, 57, 21, and now 62. So what you want to see in this double bottom base, just hold above that 60 level and then eventually, rally through this downtrend line. So that would be your buy point in my opinion. I mean, if you didn't get in, I forget what buy point I had for this thing this week. Probably above Friday's high. I forget. Maybe $60. I don't know. 59. I'd have to go look at my sheet, which I have right over here. Oh, 54.50, which is probably the high from Friday, right? This right here. Yeah. So I don't know how my mind works, but yeah, 54.50. So yeah, higher highs. So, and to me, if you want to own Dutch Bros longer term, this is still absolutely viable. It's actionable. I want to take a look at, if I'm buying something longer term, I want to take a look at the monthly chart. I want to look at these things on all time frames. And this to me is still, you can consider this still, just one big giant IPO base. Now I'm talking longer term here, and yeah. If you want to hold a stock, which I think could be, big 10 bagger, this thing is just, in this box. And it needs to break out of this Darvis box type of pattern, which I believe is like 81.40. So it did that after earnings, then it comes back into its cocoon and it's hiding here, but it'll pop out of there eventually, and the caterpillar will turn into a butterfly. Eventually, that's for patient people who have time and want to invest in retirement. I think this is a quality stock, as I believe Robinhood is. And I'm gonna do the same type of activity with Robinhood, is that it needs to break above the downtrend line really here today. So it's right there. So what I'm talking about in a follow through day in a couple of days, if this goes sideways and breaks above that downtrend line, that's an add-on buy point or an initial buy point. I think today, this week, I put it on though at what was it, 36.25? Yeah, above the high. So if it starts making new highs, that's where I put my buy point for this week. So if you got into these stocks, congrats. Wow, it's up 23% today. Nice. So anyway, um, well, like I say, if you didn't get it, there's time. If we have a follow through day, we're going to have an extended rally that looks, something like, this, right? So it's, months and months of rallying. So relax. All right. Don't get too excited about one day in the market. That's your emotions taking over. And you don't want to be an emotional trader. You want to be a technical trader and, using buy points like, you had here at whatever I said, 36.25 on Robinhood and 54.50 on Dutch Bros, and what was it, 36.84 on TG Therapeutics. Another one that I had, ADMA, giving away all my secrets here. This is a cup with handle pattern, which, these types of stocks are not really working in this type of market, these cup with handle breakout patterns, but this thing was up 9% today. There you can see it on the weekly chart, pull back to the 200. So yeah, I like ADMA. I like drug stocks because I think people are going to use drugs whether it's a good environment or we're in a recession. People are they need their medication. So anyway, that's my story. I'm sticking to it. ATGE is another one that I had on the ready list. I believe it was like I liked it above 104. That was probably what, Friday's high. I don't know. I do stuff on the weekend. I forget what happens during the week. So anyway, I don't know what I was looking at. Anyway, today it was the high was 107.05. So still actionable and just trying to be diverse, not just getting locked into software names or drug names. So or crypto names or whatever the situation may be. Anyway, a lot of stocks to go through. I can't get to all of them. I will do some screening tonight. I'm looking for stuff above their moving averages. And so thank you for watching. In honor of the great Steve Jobs, thank you for watching. We have one more thing though, and that is the gold stock. So don't forget about gold. Every morning I post the price of gold, and the gold has been ripping. And so there's one constant thesis, and that's what I look for in markets: themes, industry groups. There's a top industry group. This thing's trading above, it's all of its moving averages here, 3.3% above the 10, 4.9%. And I would put this on the red list if it just pulled back a little bit, and it did, and I didn't put it on. So I'm a big dummy, as it pulled back to the 50, but watch when I post those, commodity reports in the morning, pay attention to gold because these things, they're the strongest stocks in the market. They're above their moving averages. They're showing strength. And like I said, you got to look at different time frames here. This was the double bottom base. This is, if the market runs higher, these are the leading stocks that are taking us higher as opposed, obviously the Mag 7 are because they're so damn big. but these are the stocks above their moving averages. This looks a hell of a lot different than that, right? I mean, big, huge, noticeable difference in these gold stocks and crap like that. I shouldn't call Google crap. I'm sorry. Just it's under the 200. So I'm just trying to make a point here. AEM is another one. Agnico pulled back to the 50. And I was talking about how in a bear market, they're going to get them all, right? They're going to sell them off. And maybe that was the end of the selling, right? You got to have an open mind and be flexible. This thing traded well below its 50 on Monday, made a low of 94.77. Maybe that was it, right? And now today rallied back above. It's 1.7% above its 10. Those are the stocks that I like. Above the moving averages, showing strength, big blue volume bars as opposed to picking the bottoms. To me, the bottoms are just too hard to pick. I mean, maybe something like Carvana, right? If you're if you're one of these, bottom pickers, I mean, made this low on Monday, you can make a hell of a lot of money in stocks like this. They move a lot. Low is 148, close it at 220, right? So, but it's still below, rallied through the 200 and it's still right at, okay, close a tick above the 50. But you get my point, right? I mean, a lot of these stocks that are a lot lower, to me, they're harder to own. But if we start a rally, some of these stocks are going to come into play with these, double bottom base patterns that I like a lot because the theory in a double bottom base is that you get one round of selling, then you get some nibblers, right? Some institutional nibblers, and then you get the last round of sellers like I'm completely out. The overhead supply, these folks who get back to even, they sell, and then so you to get a total washout. So everybody who's wants out of the stock is out, and then you get buyers coming in, and that's the beauty of the double bottom base pattern is that everybody's washed out. Anybody who's out who wants out is out, and now buyers come in. So you're riding that wave higher, and that's why double bottom base is one of my favorite patterns, and I'm showing you a lot of them this week. But WPM is another one. I'm just trying to point out these metal, mining, gold, silver stocks are something to pay attention to. WPM pulled back to its 50 and then bounced. And now today it's 5.5% above that 50. Made that low on Monday like everything else of 68. Now it's well above it. Could it take out that high? It was above 80 last week. Yeah. So that's what I'm looking for. DRD is another one, a South African miner. This one didn't even pull back to its 50. This one's showing real strength. So is a Royal Gold, pulled back to its 50. Now today, closed 63% of the daily range, but above, 8.2% above the 50, 2.7% above. So that's the difference. I hope you can see the difference. That's what I like, stocks above the moving averages, but I'm not discounting, stocks like I didn't show AppLovin, sold off brutally, right? Pull back to their 200. And these are the ones you can make a lot on if, you have the gumption to buy a low. There's 234, ran down to 352, made that low on Monday. And once again, you have the higher highs here every damn day since last Friday. So that's telling you something, right? 245, 253, yes to 261. Today's 280. Once again, this is going to, I believe, if we have a rally, it's going to break above this downtrend line. And once it does that, that's another buy point for you. If you're not in this thing already, this is definitely one to watch. And this is one that I think stocks that have shown the ability to move, like AppLovin, you don't ignore these things because, yeah, I know it's 92 billion. This could be another five bagger and go up to a 500 billion stock. Why not? Or at least a two bagger up to 200. So this is not going to be discounted by me. Right now at 275, maybe it go to 550 if we have a rally. So just trying to keep an open mind, trying to be flexible, trying to show you different types of stocks below the moving averages and above. And a lot of these double bottom bases are something to pay attention to. Anyway, that's it for me. Obviously, it's a real exciting day, but don't trade an emotion. Trade with technical and proper buy points and don't chase stuff. Let them come to you. Okay, thank you for watching at mcstockcharts.com. We never give up, ever.